Fundamental analysis is a method of evaluating the intrinsic value of an asset, such as a cryptocurrency, by examining its underlying economic and financial factors. This method can be used to determine whether a coin is undervalued or overvalued, and to make investment decisions based on that determination. The first step in fundamental analysis is to research the coin's technology and development team. This includes examining the coin's white paper, which should provide information about the coin's goals, features, and underlying technology. Additionally, it's important to research the development team, including their experience and track record in the industry. The second step is to look at the coin's adoption and usage. This includes examining the number of active wallets, transactions, and overall usage of the coin. Additionally, it's important to research the coin's partnerships and real-world usage, as well as its acceptance by merchants and businesses. The third step is to examine the coin's economic factors. This includes looking at the coin's total supply, inflation rate, and any changes in these factors over time. Additionally, it's important to research the coin's mining rewards, fees, and any other factors that may affect the coin's value. The fourth step is to examine the coin's competition. This includes researching other coins in the same market and comparing their features, technology, and adoption. Additionally, it's important to research the overall market conditions, including any regulatory changes or economic factors that may impact the coin's value. The fifth step is to review any recent news and events related to the coin. This includes researching any major announcements, partnerships, or developments that may impact the coin's value. Additionally, it's important to be aware of any negative news, such as hacking or security breaches, that may affect the coin's reputation and value. The sixth step is to examine the coin's trading volume and liquidity. This includes looking at the daily trading volume and the number of exchanges that the coin is listed on. High trading volume and liquidity indicate that the coin is popular and in demand, which can have a positive impact on its value. The seventh step is to examine the coin's community and social media presence. This includes looking at the coin's social media followers, subreddit subscribers, and overall community engagement. A strong community and social media presence indicate that the coin has a dedicated and engaged user base, which can have a positive impact on its value. The eighth step is to examine the coin's code repository and development activity. This includes looking at the coin's GitHub repository and the number of commits, pull requests, and issues. A high level of development activity indicates that the coin is actively being developed and maintained, which can have a positive impact on its value. The ninth step is to examine the coin's regulatory environment. This includes looking at the coin's legal status in different countries and any recent regulatory changes that may impact its value. For example, a coin that is banned in one country may have a lower value than a coin that is legal in multiple countries. The 10th step is to examine the coin's market capitalization and historical price performance. This includes looking at the coin's current market capitalization and its historical price performance over different time periods. A coin with a high market capitalization and a history of steady price growth may be considered a safer investment than a coin with a lower market capitalization and a history of volatile price movements. The 11th step is to examine the coin's long-term potential and future prospects. This includes looking at the coin's potential for future growth and adoption, as well as its potential for future partnerships and developments. A coin with a high long-term potential may be considered a better investment than a coin with limited future prospects. The 12th step is to consider any environmental and social factors that may impact the coin's value. For example, a coin that is energy efficient and has a focus on environmental sustainability may be considered a better investment than a coin that has a large carbon footprint. The 13th step is to consider the coin's team vision and their plans for future developments. The coin's vision and plans may indicate a strong possibility of growth and adoption in the future. The 14th step is to consider the coin's scalability, and its ability to handle increasing number of transactions. A coin with high scalability potential may be considered a better investment than a coin with limited scalability. The 15th step is to consider the coin's governance structure and its decision-making process. A coin with a decentralized governance structure may be considered a better investment than a coin with a centralized decision-making process. The 16th step is to consider the coin's potential use cases and its real-world applications. A coin with a wide range of potential use cases and real-world applications may be considered a better investment than a coin with limited use cases. The 17th step is to consider the coin's level of decentralization. A coin with a high level of decentralization may be considered a better investment than a coin with a low level of decentralization. The 18th step is to consider the coin's network security and its resistance to hacking and other security threats. A coin with a high level of network security may be considered a better investment than a coin with a low level of security. The 19th step is to consider the coin's privacy features and its ability to protect users' data. A coin with strong privacy features may be considered a better investment than a coin without privacy features. In conclusion, fundamental analysis is a method of evaluating the intrinsic value of a coin by examining its underlying economic and financial factors. By researching the coin's technology and development team, adoption and usage, economic factors, competition, and recent news and events, investors can make informed decisions about whether to invest in a coin and at what price.